Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, March 30th, 2010. Well, folks, the markets are neutral to slightly lower today after earlier in the day being higher. We initially saw a small gap up and a strong push to the upside early in the morning, only to reverse pretty quickly right around 10 o'clock. We got some key data out this morning. I'll go over that briefly here. We saw, again, out from the economic perspective of the market, Case-Shiller 20-City Index out this morning at 9 a.m. Eastern Time. That came in basically in line with expectations, showing a decrease in price of housing again, but really the smallest decrease we've seen in quite a while. Consumer confidence was released at 10, coming in slightly better than expectations, and again, on that news, the market did get a little bit of an initial pop, but then reversed very quickly. That's right here on the charts, folks. So why did that reversal take place? Why did we dump out like that? The easy answer would be just look at the dollar, guys. The UUP right there started to rally. The dollar started to surge to the upside. And sure enough, once that dollar started to take off to the upside, this market was essentially done, at least for the morning session. Sure enough, here you can see, look at this. Really right around here, you see the dollar continuing to climb, really towards the highs of the day right now. You have a little bit of a double top area here. 200 moving average would be just above on the intraday UUP chart, which is the dollar chart. The dollar UUP is up 10 cents on the day. So again, we're seeing some strength there. What do we know about that? The meaning of the markets. That means the markets will be generally on the weaker side. The SPY right now is down about 5 cents. Now, it's interesting because the dollar's strength obviously puts pressure on the markets, but in the same instance, light volume keeps the markets floating. So you have those two factors kind of negating each other in the aspect that if the dollar was as strong as it was today and we had normal volume, the markets would probably be down 50 to 100 points on the Dow. However, because of the light volume, it's really keeping the markets in check. The spiders are down about a dime on the day. As I mentioned, the markets are overall slightly neutral to lower. You have the Dow down 3 points, NASDAQ is flat, and the S&P down about 1.3 points on the day. So that's what we have right now, folks. Markets, again, continuing to hover here. Initially, we had some great trading activity this morning. Good morning day trading session again. As the markets initially popped up, we went right into my master level here, folks. Master level was right here at the 117.75, 117.80 level. That was a major level I gave to the chat room at InTheMoneyStocks.com to short. Sure enough, look at the pullback. I shorted it myself for a nice, good, solid scalp to make some profits for the day. As the market came all the way down, it came down to the green trend line, which is now support. That bounced, then it bounced up, came back. Second pierce, took it out. In addition, see this blue trend line? You took that line out to the downside. That's very significant. In addition, you created a new green trend line, we'll call it right here, green trend line sloping up, connect that to the low, and then look at the lows here this afternoon. This is the next trend line you have to break, and right now, to be honest, the volume is too weak to break it. I'll be honest with you guys. It's just not going to happen unless we get a surge in volume this afternoon, which is highly unlikely. Volume right now is 108 million traded on the SPY as we approach 2:30 p.m. Eastern Time. Again, we talked about the economic news. The technicals of the chart are as follows. From the down drop, you have an in spirit of bear flag, but in spirit of bear flags have a tendency to fail very often when you have light volume like we do now. Look at the volume this morning on the reversal. Big volume on the reversal, but then look at the volume here, guys. Minuscule to say the least. If you do break this area right here, folks, the green sloping trend line, you will go to a double bottom, which is right around 116.90 to 95. If you take that, then you should come all the way down to gap fill, which is at 116.65. 116.65 would be gap fill. That would be a major level. All right, so that's what we have right now, folks. Again, the technicals dictating that you have an in spirit of bear flag, but remember, in light volume, you always favor the neutral to upside. When you have this type of environment where you're going to go into a jobs report on Friday when the markets are closed, when the volume is dead because of the Passover holiday, because of Good Friday coming up, you always favor neutral to positive. That's just the way it is, folks. And again, once we get through this week and you get normal volume, then we can start to analyze the markets again on another basis. You're still relatively close to 11,000 on the Dow. That's something we have to pay attention to, and we'll continue to follow that very closely. 60-minute spiders, very interesting chart here. See this white trend line, folks? Master trend line sloping up. We hovered here, bounced off of it, came up, and came back down, and now we're hovering on it again. If this breaks, you have a good drop all the way down to about 116 even number down here would be highly probable if this white line here could break on my 60 minutes. So there's a lot of things to watch, but at the same time, you have to take it with a grain of salt that we do not have a ton of volume in this market. In addition, tomorrow we have the ADP jobs number. That's the private sector unemployment numbers, folks. That's usually given a little bit of credence because it kind of tells us what the unemployment number will be on Friday. Friday's unemployment number, you're expected to add up to 300,000 100,000 jobs. Generally, 200 to 300 is consensus right now. Now, you might say, wow, that's a ton of jobs they're adding. This economy must be amazing. But that's not necessarily true, because at least 100,000 of that would be considered to be census workers. They're basically hiring basically from last month all the way to April, or to May. I think it's at the beginning of May. They're hiring 1 million part-time workers for the census. So, you have to take it with a grain of salt. The market doesn't necessarily realize that yet, but I think it will over time, and you want to be aware of that a lot of these additions will be census workers. So watch that number, and again, take it with a grain of salt on Friday based on what it is. See how the market reacts. The market will understand that the census workers are a big portion of that. It's basically saying that 100,000 of those workers should be census workers. So if the number is 100,000, then that means there was no job growth. If it was 200,000, that means really just 100,000 of natural job growth, which a lot of people are going to say is because of the snowstorm. So the snowstorm lagged last month. Now this month they're saying we should automatically be adding that. So really you have that factor of the snowstorms and the census jobs. You have to be over 200,000 just to cause any regular job gains. And again, very interesting to note this, folks. All right. Now continue to watch this market, folks, as we continue to inch up. Very, very interesting market again across the board. We will talk to you guys all tomorrow, as always, or join the Research Center to get my nightly analysis, hardcore picks, plays, and everything else. Again, yesterday we had a great play, folks. CNLG I gave to the Research Center and chat room yesterday early afternoon. Sure enough, it ran 25% by the end of the day. More plays to come like that today, folks. I will be posting something later, most likely, and again tomorrow and on Thursday. Take care, folks. Talk to you then.